Hello, everybody. Hello, and welcome to the second day of our 5-day trading challenge. Good morning, good evening, good afternoon, wherever you might be in the world. My name is Amir. I'm one of the traders here at Tradology, and I'll be your co-host for this webinar today. Hope you're feeling well, that you settled in. Has anybody of you tried already the profit system? Just let's take a look at our participants first. I see a lot of you here. Let's just check. Benji, hello. Andre from Montreal. Maurice from Canada. Hi, Andre. Piotr from Birmingham, UK. Cardell from US. Devon from England. Victor from South Africa. Hi, Victor. John from Port Elizabeth, South Africa. Hello, William from France. Rudolf from Germany. Labrini from Australia. Hello, hello. Hello from Los Angeles. From Lawrence. Nice. Hi. Hello, Stana. Hello, Mason. Neville. Hi, Michael. Michael, it's afternoon for you. Hi. Okay. Samuel. Hello, Sammy. Rakesh. Andre. Yes, you started the profit wave and got 59 pip. Wow, that's nice. That's great. Okay, that's nice to hear. Piotr, you haven't started yet. Okay, there's still time. Profit wave. Okay, Joe from London. Richard, you're still trading. That's great. That's great to hear. Kelly from Canada. Hello. Juan, yes, closed out with a small profit. Nice to hear. Sammy from Nigeria. So hello everybody. It's so nice to have you all here. Just before we begin, I'd like to remind you that for people who are watching us on YouTube, feel free to use the chat. Also, the guys watching us on Facebook, feel free to use the chat. And of course, if you are here with us on Zoom, there's a chat button at the bottom of the screen, so you can use it and ask any questions. We'll try to answer as much throughout the webinar. If you haven't downloaded the yesterday's gift or you missed the webinar, you can catch all of that on www.acceleratingprofits.com. You will also find a link for the next day's webinar there as well. So anything you need, the downloads to watch the replay of the webinar or to grab the next day's link, all on acceleratedprofits.com. Okay, so I'm not here to waste your time. Without any further ado, let's get started. Our presenter for today is Mr. Adrian Jones. Probably for you who've been yesterday here, you know him already, of course. He's a CEO here at Tradology. He's a full-time trader, content creator, and educator. He has educated over 1,000 students, teaching his trading systems and techniques, made them successful. So hopefully he'll be able to do that for you guys too. So Adrian, how are you doing? Are you here with us?
Hi guys. Yes, and I just want to make sure that everyone can hear me before I get going. Everything sound okay from your side?
Yes, loud and clear.
All right, great. So welcome everyone. I'm really chuffed to see so many people. So really glad to see so many here today again, and some faces I recognize from yesterday. Excellent. I appreciate that. And today, as Amir said, we're live streaming on YouTube, Facebook, a few places. So please, feel free to post any information or chat that you want in the chat box here, also on Zoom. And at the end of this webinar, I'll also have a chance for answering questions that might arise. I'm going to be asking Amir just to keep an eye on those for me, because it's very hard to keep track of all the chats happening while I'm doing the presentation. So I'll mostly be doing a presentation, and then towards the end, we'll also answer questions. And also, I've got a few other information stuff for you there. So I'd like you to stay right to the end, please, because I'm going to tell you how you can get a hold of $250 worth of value as from today with other systems. And how to get another bigger system worth $750. So please hang around for that. And today I want to continue with what I had started yesterday. So for those of you who are joining for the first time today, as Amir mentioned, there will be a recording of this up on the page. I will remind you of the page towards the end. And I want you just to follow on today. And you can always go back and watch that. And for those of you who were on yesterday, of course, you can rewatch that too. And firstly, I'd like to start off by just going through some general terminology, and I'll get to that in a moment. Then I'm going to go through the system that we got yesterday, the profit wave system, and show you some extra techniques that you could use with that to improve your trading. And so I'm very excited to get going. So I think we've got a lot to get through. So without further ado, I'm going to start, and it might just take a second while I get my screen set here, and in just a moment we'll be good to go. All right, so there we go. And again, you'll see probably a toolbox from Zoom. If you're on Zoom at the moment, on your right-hand side, if anything's in the way there, you can just click a button and it'll disappear. It'll unpin it for you. So, excuse me, today we're on day 2 of the 5-day Forex challenge, and I'm your host, Adrian Jones. And what I want to do today is focus on how we can increase our success rate, following on from yesterday's lessons. And before we continue with the recap and new methods to use with the profit wave system, let's just cover some other interesting information about the Forex market. Yesterday, I didn't want to bombard you with too much information, but the reason that I'm giving you this is also so that you can see, because there's many people on here, right, and don't have the chance in this webinar to get to know you all personally. But as I'm going through this, you might be able to yourself identify where you fit in with some of the details I'm about to show you. And it's just very interesting to get through it. So let's just continue, sorry. So we'll get to see just how widely used the MetaTrader 4 platform remains. As I mentioned yesterday, it's one of the most popular platforms that traders use for, at least with Forex trading. And our systems are designed exclusively for that for the moment. And we'll also get to see how popular various timeframes are. So for those of you who are beginners, you might, as we go through this, get a bit more information. Some of you have got more experience, perhaps, and some of this might not be familiar to you. So I'm hoping it will be at least of interest to you, if nothing else. I'll reveal some statistics as we analyze the extent to which many strategies are tested on average, and the average amount of time traders spend on their trading. I'll reveal how profitable traders on average have been shown to have almost twice as much experience as unprofitable traders. But if you're not experienced, don't worry, we'll get to that. Right? So profitable versus unprofitable traders. Let's have a look at some of the differences. What are the major differences between what a profitable and unprofitable trader is doing and plans to do in their trading? Now, a few of the important findings in the report that I had made will cover more next. So from our own findings, about 37% of traders are either breaking even or profitable, right? So 37% most likely of people that are on this particular presentation are either just breaking even, just making their money back, or are profitable. The other remaining 63, of course, might not be. Now, 15% of traders, of those, one could analyze it further and drill down, about 15% of traders I've found who've joined for the first time are profitable at that stage. And 85% of traders are using, at least 85% are using MetaTrader 4 in their trading from some of the initial students that I've had. 66% of traders use the daily charts. So that's a more longer term trading perspective. 41% have an average of 9 to 20 trades per month. 58% have either not paid for any education, books, trade testers, or bought any indicators or any of that lot. Most are relying on basically free information that they can find wherever they can get it. And 47% have not paid for any education, never formally been educated or had any kind of tools presented to them, sorry, at any stage at all. So that's almost half. And obviously, we want to change that around. If you find that you're in any one of these categories on the lower end, not to worry, that's what we're here for. So who exactly is trading Forex? Well, the average trader age, we dealt with some of this yesterday, but the average trader age, 49%, almost half of retail traders are aged between 25 to 44 years of age, 9% 65 and older, and the balance in between. So you might find that you're in one of these categories, but it's just out of interest really to show how we are broken up generally amongst us. Now, do traders have any other trading experience before Forex? Well, 72% have had no experience trading any other markets before trading Forex. So in other words, no other markets or even Forex. And you might find yourself to be amongst that 72%. The other 28% have dipped their toes into the market, so to speak, at some stage or other with some form of trading. So don't be despondent if you find that you are someone who's brand new to this. You are amongst a majority. Now, how long have traders been trading for generally? Those that have been trading, 39% have traded for between 1 to 3 years. 31% have been trading for 12 months or less, and 7% have been trading for over 10 years. And that's probably very similar to how we've broken up here on this call today as well. You'd find that you're amongst one of these, or you are one that hasn't yet started trading, right? So we'd fall into one of these categories. And of course, the information I'm giving you would be relevant to you no matter what category you fall into. Now, are traders generally trading on a live or demo account, those that are trading? Well, surprisingly, 70% of traders are trading on a live account, which means that they're trading with real money through their brokers. They're not on a practice account or a demo account. They're using real money in their trading, which is a double-edged sword in the sense that most of the traders trading on live account, as we just may have learned, are beginners or relatively inexperienced. And so we need to make sure that when trading on a live account, we especially reduce our risk. And what attracted traders to trading the most? Well, these are the most pertinent findings. 40% of traders wanted to be their own boss with their own rules. So I gather that nearly half here have got the ambition or have got the dream of being their own boss with their own rules, or at least being able to start their own business in some sense. And as I said yesterday in the previous, in day one, I'd like everyone to try and treat their trading as a business. When you do that, there's a certain psychology that comes into play, and it's, I don't want you to think of it as a job, but it is something that could potentially bring you revenue, income. And that's what I'm sure the majority of people on here are looking for. Now, what markets do traders trade generally? Well, 97% of my respondents have traded Forex. Some of these have traded gold, 43% have traded with gold on the MT4 platform. 24% of these have also had some dabbling in the stock indices and some with cryptocurrencies. Now, what trading platforms are used the most? Well, 85% trade with MT4. From my findings, 85%, the vast majority of traders are using MetaTrader 4. 6% on average are using MetaTrader 5, which is another platform that can be used, and 5% CTrader, 4% other. So hence, you'll find that most of the systems that I deal with are, excuse me, related to MetaTrader 4, and that's the reason I developed them for traders. Now, do traders aim for a higher win rate or a higher risk to reward ratio? That's to say bigger winners. So are you looking to win more often, say 6 trades out of 10, or are you looking to make as much money out of one trade as possible? And 64% of traders are aiming for a higher win rate, which is good. That's what we should be looking for. As I mentioned yesterday, we're looking for consistency in our trading. It's great to have one or two great trades, but there are going to be losses along the way. And we know that for a fact. It's just a fact of life with trading. But you want to try and keep your win rate, as I mentioned yesterday, as high as possible. And in fact, tomorrow I'm going to go into more detail about that also. So on average, how many trades do traders take each month? Now, 41% of traders make 9 to 20 trades per month. 35% from my findings have made 4 to 8 trades a month. And as we mentioned earlier, a lot of the traders were also trading on daily timeframes, which means that the trades can take a few days to play out. And 14% make over 30 trades per month. So the vast majority are trading actually in the longer term, and 14% are making a lot of trades, either on the longer term, but most likely on the shorter term, smaller timeframes. And I'll get to that a bit later. So how many strategies have traders tested? And you might find yourself amongst this lot as well, including just price action on the charts or using indicators or EAs. If you're new to trading, it's, these are automated tools that you could use to trade. So how many of these have traders tested that I found? 26% have tested at least 6 or more different types of strategies. And a further 38% have tested 3 or more. So a lot of us there, you could see about 30-40% have not traded with any strategy before. And those that have obviously are busy testing various strategies to find those that do suit them. Now, what time frames do traders make their trades on? Well, as I mentioned earlier, about 66% of traders use the daily charts. 48% of these also, there's a bit of an overlap, use 1 hour charts. Excuse me. And that plays out from the figures that I've shown a bit earlier. Now, in the last 12 months, what have traders purchased to help speed up their learning time in the markets? 47% have not done anything, including books or trade testers. They haven't educated, almost half have not done anything to improve their education over the last 12 months. And the other have, of course, tried some courses or books or strategies and so on. So at least half the people on here, I would expect, have not really had any kind of education in the last year or so. Now, during the trading week, where do traders spend most of their time online? 50% spend their time online reading lessons and watching videos. So of those that do, at least half are watching online lessons, watching videos, and so on. 8% are part of some kind of group or tribe, whether it be some Facebook group or other membership of some sort, which is actually a very low percentage. Now, how many hours per day do traders spend with their charts and trading from my findings? Well, 45% of traders are spending about 1 to 2 hours a day trading. So almost half of traders are spending about 1 to 2 hours trading, and 14% are spending 6 hours or more. And the balance are, of course, in between this. So just a very small percentage are spending, more than 6 hours. Majority are spending just a few hours a day trading. And that includes the profitable traders. Now, profitable versus unprofitable traders, this is what we know about the profitable traders and what they do differently, right? So time frames most commonly used. Profitable traders, 72% of traders use daily charts. Most of them are using daily charts. Unprofitable traders, 62% of traders are using daily charts. So a very small difference between them, right? Profitable or unprofitable, both try on daily charts. Some are profitable, some are not. What's the average amount of trades each month? Profitable traders are making about 16 trades on average. Unprofitable traders are making 15 trades on average. Hardly a difference between them. So one could say, well, it's not the amount of trades you're making per se that's making you profitable or that's causing you to lose, right? So as you can see, both sets of traders are making almost the same amount of trades, which shows it is both the trades and how they are managed that are crucial. As I said, your risk management and your trade management are what are crucial. And how much experience do profitable and unprofitable traders have? Now, profitable traders have an average experience of about 5.4 years. Unprofitable traders, 2.5 years. But that's not to say that you need to wait 5 years to be profitable. It's to say that most profitable traders have been trying to learn for many years and have probably been stumbling along, not learning properly, as we learned earlier. For 12 months, almost half have not even gone on to educate themselves in any way. So that says a lot there. How many hours per day trading? Profitable traders, about 3 hours. Unprofitable traders, 3 hours. No real difference. So it's not the amount of time you're spending each day trading, it's going to necessarily make a difference between whether you're profitable or unprofitable. And it's not the amount of trades that you're taking each day that's going to make you profitable or unprofitable. How many strategies tested? Profitable traders have tried at least on average 3. Unprofitable traders, 4. Again, very little difference. And it comes down to, one could read into those numbers, that it's the strategies that are making the difference, not the number of strategies that you've tried. It's what strategies you are trying that make the difference there. So it's interesting to note that profitable traders on average have actually tested less systems, strategies, EAs, and other methods, a little bit less. So that brings us back to the system I gave away yesterday, the profit wave. And again, that presents us with opportunity, because if we're still in the beginning stages of our trading career, or even if we are at we've been doing it for a few years and we just find we're unprofitable, but we know that in the current market situation, as I mentioned yesterday, there's a lot of volatility. It's actually a great time to trade Forex. And this presents us with an opportunity, provided we have a good system to trade with that fast tracks us, that we understand the markets at least a little bit better. And I'm hoping that some of these stats at least give you an idea of where you fit in, so you don't feel left out, or you might feel that, perhaps you were different in some way, or were worried that because you were different, you couldn't do it. That doesn't matter. It's all about taking the opportunity to learn and to fast track yourself, your progress. So the profit wave system is designed as one of my systems to fast track you in the quickest time with the least amount of complex indicators, so that you can profit from day one, right? So it's a proven, replicable, mechanical, in other words, just follow the rules, 1, 2, 3, 4 system that you can use straight away. If you haven't yet downloaded it, just a quick reminder again, you can get it free from www.accelerating, and actually there's a spelling mistake here, sorry about that, but it's ACCELERAING profits.com as my gift to you today. And just download the file, the manual, if you haven't done it yet, and you can get started. So I'm going to carry on with a recap of the profit wave trading system. And at the end, I'm going to remind you also that there's another system coming tomorrow. So let's quickly, for those who just need a quick recap, you might have already got the system, or you might not have downloaded it yet and tried it out. But let's see. If you joined me yesterday, you will have gotten all you need to know to start trading it. If not, there's still some time to download it today, as I mentioned. So I'll recap and take a quick look at the rules again. And I'll just quickly run through these. We did go through these yesterday, so I'm not going to spend too much time on them now. So firstly, the blue SMA must be above the red SMA. And for this, in this instance, we're looking to buy into the market. The step MA blue line must be above the step MA red line. The MACD blue line must be above the red signal line, and the MACD histogram must be blue and above the 0 level, right? And we enter the trade at the close of the candle where all these conditions were met, and we set our stop loss a few pips below the most recent swing low. We set the take profit at a 1-to-1 risk to reward. And then opposite for sell rules, blue SMA below the red SMA, step MA blue line to be below the step MA red line, and the MACD blue line must be below the red signal line, and the MACD histogram must be orange and below the 0 level. And again, one can just mention here, the arrows will help you indicate with the step MA whether it's in a downward or upward direction. So it's just 4 simple rules for up or down. And then we enter the trade at the close of the candle where all these conditions are met. We set our stop loss a few pips above the most recent swing high, and we set our take profit at a 1-to-1 risk to reward ratio. And you can see here, then eventually price trailed down and would hit our take profit level there. And that's it. So we're going to add another feature to this today, and it's related to support and resistance levels. Now, some on here who are new would not know what a support and resistance level is. Others have got some idea, and some are very experienced with trading with support and resistance levels. But this is one of the key tools generally in trading, whether it's with the profit wave or other systems, that one can use to better your trading, to limit your risk, to get more certainty when entering into the market. So I'm going to go through, for those who are new to the trading experience, and for those who just need a bit of a refresher, what support and resistance levels are. They're one of the key components to trading that we should be aware of, at least, and on the lookout for. And then I'm going to use that in relation to the profit wave system. Right. So let's quickly cover it then. Support and resistance levels will give you, or give a trader, a really good idea where the price that you can see on the chart has a high probability of stalling, of turning around, or of taking off. And I'll show you some images in just a moment. Now, ignoring these levels at the time of a trade would mean that the trader is taking an unnecessary risk and placing an uninformed trade most of the time, right? And it's important to note that support and resistance aren't precise levels. They should be looked at as areas. Now, support is a level where price drops to, and I'll show it to you just now on the chart. So price drops to a certain level and then turns back up. It will come down and be supported as though it's hit an invisible floor. This is where the market is being supported from losing any further value, right? So price moves down, stops, and might then retrace back upwards at a certain level. And generally, the support levels you see on the chart will be V-shaped. This makes them easier to identify. So here's where, let's just read what it says here. V-shaped valleys denote levels of support. Price falls and then bounces back up. So we've got these levels marked out here. And if one had to open your charts, you could probably find these quite easily. And it's something that you should at least be aware of when looking at a chart. So you can see, for instance, over here, price moved down, went back up, formed a level there. Price moved down, went back up, kind of V-shaped, right? Price went down, went back up. And you'll see how in each of these three circumstances here, it almost touched that level, it touched it there. So if you were aware of that level at this point here, you would know that if price goes down, it's going to find some support here, and it potentially could break back up. And the same here. And if we move back up here, you can see another V-type shape here. Price came down, so we created a support level there. And another price moved down, created a support level there. And yeah, there's a few others here, and I'll get to those in just a moment. But I just wanted to show you in a relatively uncluttered chart what these support levels would look like. Now, there are major support levels and there are minor support levels. The major levels are the ones that really jump out at you from the chart, but there are more subtle levels that are acting as support also. So let's just have a look at these quickly. So we've got minor levels of support, which are denoted with these green blocks here, and major levels of support with these red lines here. So we've just covered the major levels. They can easily be seen, you know, they're quite strong movement down, strong movement up, strong movement down, strong movement up. But within those movements, there's also smaller V-shaped movements. So you'll see price, and you'll see this on any chart, price never just goes off in one direction. It always is stepping up, stepping down, creating these patterns. And here you can see price went up, went back down, went up, and that would be a minor support level. Went back up, came back down, went back up, came back down, another support. If you could just imagine a V here, and back up, a small V shape here, and all the way here also, and again there. So we've got these major levels and minor levels of support. Now, exactly the opposite is what we call resistance. Now, resistance is when price climbs up and hits the ceiling and resists moving any higher. The older stock traders would view this as the market being resistant to further gains. Right? So on a chart, resistance levels will look like peaks or a mountain or an upside down V shape. So we'll get to that in a moment. So like support levels, There are major and minor resistance levels. The major levels will be the peaks that stand alone, very distinct and individual looking. The minor levels will be a little more subtle. So let's have a look at this. So here on this chart, we can see that with the red lines, we've marked off where we have major levels of resistance. And you can see these are clearly big moves. And again, a big move. This one's quite clear, and so on. And then in between these, you get these minor moves upwards. So you've got the resistance over here, and then support, resistance, support, resistance. Support, resistance, support, resistance, support, resistance. And that continues right throughout the chart that you would see. So the minor levels are denoted here with all these green blocks and are relatively easy to identify if you look at a plain chart. Okay. And we're going to use support and resistance levels to help us decide if a trade should be taken or not. And they can also come in handy when we're looking for profit targets to be aiming for. And the more we familiarize ourselves with these levels, the simpler our trading decisions will become. So let's see how they're used with the profit wave system. And although I'm going to show you how to use them with the profit wave system, as I mentioned earlier, really, you could use these with any system. This just is an extra tool. Hence, it's not part of the rules per se of the system, but you can use it as, say, a caveat. If you wanted to have an additional confirmation to lower your risk even more, it might, in turn, oftentimes maybe mean that you don't enter a trade for whatever reason because it hasn't hit these levels. But that's fine too, because we're trying to mitigate our risk. And first, I'm just going to show you this on an image, and then I'll move on to an actual chart. So I know at this stage there might be some questions. So before I get to that, it will be better, I think, that I show you on an actual chart in just a moment so that we can see these levels. And I'll show you this particular trade on a chart just now as well, because at the time I took the screenshot, since then there's been a lot of candle movements afterwards, and we want to just try and make it clear as possible here on the screen. So in the normal situation with our profit wave rules, we would be waiting for this blue line to cross, and it would have crossed over here, right? And we would have been waiting for these other indicators to be in alignment after that, which they were here for a sell trade. Now, in fact, at this candle here, they were already set up that way. And we could have, at the open of this candle, have entered a trade to go short, or at the close of this candle, sorry. But if we wanted an extra confirmation, we could wait until one of the resistance lines or support or resistance lines is hit and exceeded. So in this case here, as we just mentioned, you know, we've got upwards and downwards movements. And you can see the V shapes. Now, this was one of the major levels here that was been marked off there. And what we would be waiting for then is, would price go below this level after our signal candle? We call this our signal candle because that's the candle on which all these conditions for entering a trade have been met. Now, this occurred very quickly afterwards, and it's not often that that would happen, but it's easier for me to demonstrate with this particular one on one image. So one would then have waited to enter once price had moved just below this. Once it does break through those levels, if it doesn't bounce off them like here, if it does break through the level, if we're in a sell trade downwards, it's a strong indication that the price, because it's broken through that level, will continue in that particular direction. On the other hand, here we have a higher level here. And you can use these interchangeably. Some people would call this resistance and support and vice versa, but just these lines, these market structural lines. If price had broken through here, and you can see how it kind of trailed along here, but if price had broken through, it's an indication that it most likely might continue upwards after that because the momentum is stronger, right? So you would have entered the trade here at this stage, and then you would have kept your target, and eventually this trade would have gone on to hit our target at this point here. Now, just before I carry on to the charts, I just would like to pause just for a second in case there's some urgent questions or anything that I need to know of from Amir's side. Amir, could you tell me if, or should we wait till the end of?
Well, let's maybe we have a few questions and we have a few results from the profit wave trades.
All right, so I'll get to those results later then. Thank you for posting those, guys. But just with what we're talking about right now, is there any particular question?
What about which time frame would you recommend
All
for
right.
beginner with a full-time job? So,
all right. Yes, that's a good question. All right, so I'll get to that. Let's wait till after I finish this, and then I'll get back to that and other questions. Thanks for posting those questions, guys. Just don't want to get too sidetracked right now while we've got this train of thought going. All right, so let's now look at identifying these type of trades on an actual chart. And just for a second, I need to now just go out of this presentation and go to an actual chart. Let's just see if it'll let me out firstly. All right, so I'm out and I'm going to go to my trading platform. Now, for those of you who haven't yet opened one, this is just a demo account for me to demonstrate on, but this is an MT4 platform. And don't worry about this, I'll get to that just now. And here we have the system on our charts. And if you are interested, I'm on the Euro USD. It's a 1 hour chart. As I mentioned yesterday, you could be trading this on the 4 hour, the 15-minute would give you a lot of signals during the day. The 1 hour less so, because each candle when you're on a 1 hour chart, and you can set the time frames here at the top, each candle in a 1 hour chart takes 1 hour to play out. So if you were going to be sitting in front of your PC and you're trading on the 1 hour and you wanted to look at how the market was going on the 1 hour, remember that each candle will take 1 hour to fully play out. And so over the course of time, this would take a full day. So there'd be 24 candles, in other words, in a day, right? And if you were dropping down to a lower time frame, I'll just do that quickly. Excuse me. Then these candles here, each of them would take 15 minutes to play out, and there would be a certain amount of them in a day. So just you'll see also that I've got on my chart here, I've got this line over here, and that's a session line or a period indicator. And what that does is it tells you basically the start of the day, the start of the session. And if I scroll across, that would have been for that particular day, that would have been the end of the session. And this is quite important for me, and I'll go into reasons why in just a moment. I'll just show you how to do that. You right click on your chart and you go to the comment tab and you press this show period separators. And that would bring up these vertical little dots on either side. Without them, it's, you wouldn't necessarily know unless you're looking at the time below where you are in the day as far as your trading progress is concerned. So I like to keep them on my charts. And as you can see here, this is a 1 hour. There's the start of the day for this particular one that I'm showing you on. It's historical. And there's the end of that particular day. So we had just had a look at this on my other chart. And so now I just wanted to show you just generally a few things about the chart. So I'm on the 1 hour with this particular trade. So again, at this point here, the cross occurred, and on this candle here, we could potentially have entered a trade, but we waited for, and we just drew a line here, and I'll show you how to do that in a moment. We waited for the trade just to go through that line. So if you did want to look at a blank chart, with this on you, you could set your own levels simply by going to this tool here called Draw Trend Line, and you click on that, and I'm just going to do a random one here. You could just draw it across. Now, at the time that you're live with the trade, you might be on this candle. So pretend none of this on the right here exists at that point because you'd be live, right? You might be over here somewhere. You could set that level, and now you'd be expecting that price would either stop and reverse at that level or break through it. Okay. And as you can see here, that particular candle there burst through it, and then price did go up further. And then we trace back down in the new day. And I'll get to that as well, why another little, well, I wouldn't say tip, but a recommendation I would make with trading this system or any other system, most systems, about the beginning or the end of your day. Now, right, so we've gone through this particular trade. We set our stop there. We got to the take profit target there. Now, how do we do this practically, with a trade? So let's just look. We're scrolling across the screen here. And again, this is historical data. So I have to, we could see how the trade played out afterwards. But if you were looking at the charts at this particular point, it would all be blank on this side, right? So we would be waiting for the cross to occur, which it did there. Then we'd be looking to see, well, is there any other signals that we could be in a potential buy trade, sell trade opportunity, sorry. And there you can see the little red arrow had appeared. The blue line was above, below the red line at that point, and we can see the other indicators here were still in alignment for the third requirement there. So if one had to, without looking at support, resistance, or anything else, you might want to enter a trade at that point there, at the close of the candle, the open of the new candle here. And when doing so, you'd be thinking to yourself, right, I'm going to enter this trade without support resistance. We'd be saying, right, we're going to enter the trade. We're going to target, we're going to set our stop loss above the most recent swing high here. And we'd be setting our target at a 1-to-1 roughly down here. And that would be fine. We could do that. But we do know, if we scroll across here, that there's a level of support here that is very close to our price. So I would have drawn a line across the screen at that stage. And I'd be saying, well, while I'm still on this candle here, I'd be waiting for this line to be broken. If it is broken through, then I could enter the trade and still go towards my target. Now, we don't know at that stage, is it going to take a long time to play out? Or maybe within the very next candle, as in my previous example, it might drop below that. So we would want an extra confirmation to mitigate our risk even more. We could wait for this level to be broken through. And one way of doing that then, without sitting waiting for a long time, as you would here, this is a 1 hour time frame, so this would have taken a few hours to play out. You could say, well, I know where my resistance line has been drawn. I know that my indicators are still in alignment. I know this is the candle I should be entering on, but I'm not going to enter just now. I'm going to set my stop loss, and one can use this little crosshair tool if you'd like to. There's another way of doing it, is move just above that swing high. And if you scroll down to the right of your screen here, you'll see the price level here on the right, right? So whatever that price level is there, you make a note of that, I have to just lean in here, 1.12848. And I've got them marked up here already for you guys. And then I knew that my target level, if it was the same distance away as that, would be set around 1.12164, right? So I've just drawn these on the chart for purposes of helping you explain. And I'd open my order, press a new order. I'm looking to go short the market. I'm looking to sell. And then I could simply put in my stop loss level there, my take profit level there, my target level that is. And then here's the thing. You get another option here. You've got two options. One is to have a market order. Now, a market order is an immediate order. So in other words, you would go straight into the trade. And that would be the case if you were going to sell off this candle. Straight away, you could enter a market order. Boom, you're in the market. Your trade is open. Or you could set a pending order. Now, a pending order is exactly what it says. It's pending, it's waiting. And if you're in a sell trade, then you get another option here to set various things. And we're going to set what's known as a sell, stop. What that means is we're going to wait for the market to continue down to reach a certain level. So from there, we're going to wait for the market to turn down. We could do this the opposite way with, if we were in a buy trade, we would set a buy stop upwards, right? But we're in a sell trade at the moment over here. And you can also, because another question that would come up, of course, is, well, I don't know how long I'm going to be waiting for this trade to play out. So how do I know? Or can I preset this? So yes, you can also set this trade to expire on a certain day or time through just clicking this box here, and it would expire. So in other words, if the target is not hit, in other words, the price does not drop below this level, I've just made that the target there, then your trade will not open at all. And after a certain time period, it would just, the trade, the order would disappear, it would close. You could also, of course, manually at any stage just stop this by going back in here and changing or deleting this. So you want to set potentially a pending order for it to breach just a couple of pips below the level, whether it's this upwards or downwards, that level. And then you don't have to sit in front of your charts the whole time, right? And then you could simply place, well, this is a historical, so I'm not going to actually place this trade, but once you're ready, you could place the trade. You could see here that you can set the actual area in which you want the price to, the order to be fulfilled, to be started, right? So it's at just underneath this line here. It would have been at 1.1232 for this particular trade, and I would have entered that amount there. So hopefully that explains a few things. Now, I'm sure there might be a few questions at this stage, maybe while I'm still on the chart. Emir, if you could, I don't know if it's me drawing here or what's happening, but
I think it's you, but that's...
Oh, sorry about that. I don't know why it's doing that. It's this Zoom software for some reason is drawing little lines here, but ignore those, please. Any particular questions about what I'm just saying at the moment?
Well, there was one regarding the topic, resistance and support, and that was, would you draw it on the same time frame or the higher time frame?
Right, you could do it on either. For this particular system, I would do it on the same time frame. Now, if you're on, well, because I'm on a 1 hour, right? But if you're on one of the lower time frames, let's say the 15-minute, let's just go down to the 15-minute now. Now it'll carry through all my previous stuff there. So let me just scroll through, and you can scroll to the end of your chart here. Just a pity we've got these markings here. Please just ignore those. But let's say on this time frame here, you could see a major level of support there. So we'd place it there, for example. Now, if I had to, I'm on, which chart am I on now? Let me just make sure. So you would go to the 1 hour time frame, right? The higher time frame. So you'd set your level there, and you can see it's basically the same there. And then you drop down to the lower time frame. If you wanted to do it this way, you could. It might take a while longer to play out, but the level in this particular instance is the same. And you might have say, well, I'd like for price to break through that level. But for the most part, you can do it on the chart that you're on. Is fine. Because especially on the lower time frames, the 15-minute, it's going to happen quite quickly. And you want to try and get in and out of the trades as quickly as you can for this particular system. So hopefully that answers that question. I'm just going to close this on the side here because I think it's interfering a bit. And I wish I could just see my tools here to get rid of this thing, but please just ignore that for now. Now, just for the sessions, I just wanted to show you something here. Those lines that I mentioned earlier, and we could always move our charts bigger by just scrolling upwards here. You could see that the session started here, the session ended here. Now, on the previous day also, it obviously closed there. Let's just go back a little bit more. No, that's fine. Now, another recommendation with this system and potentially other systems you're trading as well is that when the day comes to an end, as we near the end of a session, as we are at the moment, because of the time zone, New York will close within a few hours. What tends to happen is throughout the day, price might be moving up and down and so forth. As it gets closer to the end of the day, you'll see how price just flattens out. The candles get smaller and tend to move sideways and become very basically range bound, we call it, just flat. And similarly, oftentimes at the start of the day will start very flat also. And not always, but generally. And when the market is range bound such as this and flat, as I mentioned earlier, volatility is our friend. When it's volatile, when the price is moving up and down, that's our friend as a trader. That's where we're going to make money. When it's flat like this, we don't expect that we might be able to do what's known as scalping, just get a couple of dollars here and there, very quick trades. But in the longer term, we know that we are going to not potentially have as many trade opportunities during this time. So I would advise, or recommend anyway, that at least maybe 2 hours before, and remember now we are in this particular instance on a 15-minute candle. So on this day here, this would have been the end of the day, a couple of hours before, which would have been, well, there's 4 candles at least in an hour, right? So at least up until 8 candles before the end of the day. I wouldn't have entered into a trade at that point, even if there was a valid signal coming through, because I'm pretty sure that the market might go flat. The other reason for not entering the trade at that time is because if you've got a trade that isn't going to close and you're on a lower time frame, this is particularly for the lower time frames. You could say from the 1 hour downwards, but definitely on the 15-minute or the 5-minute and the 1-minute. If you're in a trade and it's still open at the end of the session, that means that you have to wait until the following day when the market reopens to find out whether your trade has played out or not, right? So you're going to be monitoring that trade. And off you go to bed, you're sleeping. Overnight, there's some kind of major news announcement that nobody anticipated or maybe even did, but something happens overnight. You come back, you open your charts, and it's not showing on this particular chart, but suddenly there's been a massive move. And you might have been looking to buy at this point here, right? So you're expecting the market's going to go up here somewhere. You open up your charts the next day, and suddenly there's this huge candle down for whatever reason, because something unexpected happened overnight, and you've been taken out of the trade. So as I said, when in doubt, stay out. If you're not sure what's going to happen within the next day or so on the lower time frames, and nobody is really sure, so rather stay out. Don't just enter a trade at that point. And similarly, when the trading day starts and it's very flat like this, it's hard for anybody to say what's about to happen during the day. You don't know whether the market's going to move up or down or what. So for the first couple of hours at least, I would say keep an eye on the charts, definitely, but rather stay out during this time, because you'll see eventually it started picking up as more traders came on board. And one of the reasons for this is while the institutions are closed, we saw yesterday that the majority of traders that are involved with Forex are not ourselves, not the retail traders staying at home. It's the big institutions, it's the reserve banks and the Fed and so on. These guys are, and hedge funds with billions of dollars and so on. They are the guys who move the markets, and they basically all go home and sleep and close their offices at this time. So, you're really just betting against other retail traders, very low volatility. You want to wait until there's some volatility, and then you jump in. As a retail trader, you then have the chance to get in and see what's happening in the market at that point. And even if it takes a couple of hours, to play out, at least there's been some volatility, so that when you do get a signal like here, you could be pretty sure, and this is actually a good example then, once again, of a sell trade in this case, you could be sure that, well, at least there's some volatility, and your targets will be a bit further than if you were just trying to target, if there was an opportunity, which there wasn't really at this stage, but if there was, then you've got these tiny targets, and you want to be involved in these nice swings up and down in the market, especially when you could see that all the signals are in alignment. Here's a nice one, and you'll see again, this is real time, as at the time of this webinar, how the market was very volatile, and then it's starting to now slow down, and most likely will just kind of hang around here into the new day. So even if a signal presented itself to me right now, I could see that there's just, with this 15-minute chart, I can see that there's just a few candles left in the day. I'm not going to get into a trade now. I'd rather wait it out. Hopefully that makes sense to you guys. So besides the support resistance levels, the end of the day, the beginning of the new day, and I'll see if I can just see if there's an example here somewhere of, see it's very flat there. You'll see it most of the times, end of the session, very flat. But there are times that suddenly, you get an unexpected spike. Well, there it's still relatively flat. All right, so I'd probably have to go back quite a way. But it can happen that, you wait and then suddenly the next morning there's this huge spike up. Or just within a few candles, there's a massive spike up or massive spike down unexpectedly against all, prior thoughts about what might happen. So just try and stay out of it at that time. Now, another thing you could do just generally, and this relates to what one might call multi-time frame analysis, but if you are on the smaller time frame, it's the beginning of the week, the beginning of the day, or whatever, you could go to the next highest time frame. Normally on a 15-minute, I'd go to the 1 hour or the 4 hour. On the 1 hour to the 4 hour, on the 5-minute to at least the 15-minute or the 1 hour. But if you're on 15 minutes, now remember it takes 15 minutes for a candle to present itself. Then if you go to the 1 hour, you'll see how the hourly candles have presented themselves. And the 4 hour, of course, means 4 hour candles for that particular day. So if you want to get a good idea of what's happening on a current pair, now I've got all these things that are marked, are going to show up here now, but you can get a better idea of the general view. And you'll see this goes back to well over a week here, just what I've got displayed on my chart. So this is how this particular pair, which I'm on, the Euro USD at the moment, has played out. It's made significant moves up and down, up and down. But we can also see that if I just move this across, sorry, let's just see if I can double click on that and you can move it across. You could see that there was a major area here. And this candle is basically, I'll just delete that one, is basically finding resistance there. You see it stopped there, came back, stopped there again, came back. So you get an idea that here's the high on the chart, there's the low on the chart during that time, during this time. And the market is moving between these two support resistance levels here in the higher time frame. So there's no clear indication, it's going up, coming down, going up. And most likely now, because it hasn't closed above this level, it could filter back down again, especially because it's the end of the day. I expect that it would trace a little bit down there again. But on other days, it might become very clear, like here, when you're looking at the 4 hour, during that course of that week, if you were looking at the 4 hour, you could see what's called a very significant upward trend. Yeah, you can see it just by looking at the chart, right? That the candles are moving higher and higher and higher and higher, and we're in an upward trend. And there's a saying that you might hear often that you trade with the trend if you can at all, right? And especially as a beginner, you want to try and trade with the trend. So if I notice this week that so far for the last few days, the market is trending upwards, and then I'm looking at going down to my 15-minute chart, I would expect that there's going to be more buy trades, more opportunities to go long, to go upwards in our trades than there would be short trades. So I'd be looking to buy, especially in the direction of the trend. So just, that's another thing you could do, is just go and have a look at the higher time frame just to get an idea. Is the market trending upwards? Are you still in that trend? it's likely then to continue, one would think, and you'd be on the lookout for more buy opportunities at that stage. All right, so I know I'm trying to fit in as much information as I can during the time we've got. I think maybe I should stop speaking now and just let everyone ask a question if there's any questions about that at this stage.
So yeah, there was one on time frames. Which time frame would be most suitable for a beginner trader with a full-time job?
Yes, that's right. I've got that noted down here. All right, so I'll answer that question now. Well, it depends on what you mean by a full-time job, but I'm presuming that you're working from 9 to 5 in the day and that you don't have a chance at all to have a look at your charts. In that case, I'd recommend that you look at the higher time frames, depending again on when in the day you would like to start trading, where in the world you are, because the New York session is about to close now. Perhaps you're in Australia and you are ahead of me time-wise. So it's just the beginning of your day now. There might not be many trading opportunities. But to mitigate against that, you would trade on the higher time frames. As I said, if you're on the shorter time frame, you want to monitor your trade, you're going to have to keep an eye on it every 15, 20 minutes or 30 minutes to an hour, just to, out of curiosity even, you would like to know just what's going on with your trade. But if you're on the higher time frame, as I said, each of these candles takes 4 hours to play out. So 4, 8, 12, just 3 candles here could take an entire day. So you could have entered a trade here just before you left work, for example, or to work. And by the time you come home from work, you're looking at your chart, it would have moved slightly upwards towards your level, might even have hit it. So I would recommend that perhaps the 4 hour, the 1 hour, or even the daily. Now, the daily would take days to play out. Each candle here, as the name suggests, is a day. So it takes a full day to play out. So you might, at the start of the week, see a trade or two that might be opportunity for you on one of the currency pairs. I just happen to be showing you the Euro USD, but it could be any of them. And if you're not sure how to do that, you would just simply go to New Chart, and you would select, and you would see here all the majors, which I do suggest, as I mentioned, especially if you're a beginner, to try and trade one of these. The most common, as we saw yesterday, is the Euro USD, and any pair basically involving the United States dollar will be pretty volatile. But the Euro USD, perhaps you are in Australia, you'd like to use the Australian dollar or the Canadian dollar here. We've also got the pound USD, so the popular ones. So Euro USD, we saw yesterday, majority of traders trade that, so we know there's going to be volatility there. And you could select any one of these and it would open a new chart for you, right? So I would suggest either daily or 4 hourly if you are tied into a job throughout the day. If in the evenings you've got a few hours just to play with your charts and so on, you could definitely try the 5 minutes. But again, this is very fast. Each candle here is 5 minutes in duration. And, you really have to keep an eye on this if you want to get out of the trade quickly. For whatever reason, you might want to decide to leave the trade. You've got to be around basically monitoring. A 15-minute gives you a little bit more leeway. 30 minutes are not that popular, but I prefer the 15-minute. And then the 1 hour. So between the daily, the 4 hourly, and perhaps the 1 hour would be my suggestion there. I hope that answers it for you.
Thanks, Adrian. While you were speaking about pairs, we got a related question from Cardell. Would you trade exotic pairs using this system?
You can, Cardell. There's nothing wrong with trading exotic systems using the system. And for those of you who don't know, you get these exotics here. They're the lesser known systems, but there's a reason there's 2 reasons, especially if I was new to trading, that I'd avoid these. Number one is that with the Euro, with the USD, the pairs, the Euro USD, for example, we know that news influences the markets, as I mentioned earlier. We are technical traders here. We're looking at the charts. We're looking to see what do our signals say. So we are not news traders, and most traders are technical traders. We're analysts of what the indicators are telling us. Now, it does happen that, for example, at the current moment, President Trump is in charge there in the US. He comes out with some kind of tweet, or something unexpected happens, and or there might be, in fact, a big news event coming out that everybody knows about. So one would expect around that time for there to be certain volatility in the market. And I'd always advise also that if you are aware of any major news announcement, like is there going to be a lockdown, it does influence the markets, but rather stay out of the markets at that time, because you might think that a particular news event might mean that the market will move up or down, but the exact opposite might happen. It might have already been factored into the markets by the banks or the hedge funds. So just also about 20 minutes or half an hour before or after a news event, I wouldn't get into a trade if it was a major news event. Now, why do I mention this? Well, firstly, because on the exotics, you have to, let's just have a look at these. You see there's a whole bunch here, and obviously these relate to particular countries' currencies, and they're not as familiar to most of us. Unless you are familiar with the pair, which country is affected or affecting the pair, such as maybe there's Nigeria, or just mentioning exotic, maybe the Brazilian currency, and so on. You might not know what exactly is going on in that country at that particular time, and that could influence easily a quick change in direction of the pairs, which is why I suggest you stay with the majors. The second reason is, which you'll discover when you're trading a live account, is that brokers charge what's known as a spread. That's their fee, essentially, for entering and exiting a trade. And their fees are a lot higher on the exotics as opposed to the majors. So, you might make, say, $100 on a trade, but nearly 20% or $20, just for an example, might be taken up by brokers' fees, less so on the majors. And that you'll find out once you're trading live with a live account. Hopefully that answers your question. It's not to say you can't, but I'll just say exercise caution if you are. All right.
Thanks, Adrian. So let's take one more, and then maybe we can comment on some of the results our attendees have posted.
That'd be great.
So Gary asked, would you go from 15-minute time frame and look at the higher time frame to stay in the trade longer?
No, once I'm in the trade, before I get into the trade, I would see if what the higher time frame is telling me. I'm thinking what you're saying is, if you're on the lower time frame, if you're on the 15-minute, because it does play out fairly fast, the fact is that you probably won't see within that time frame of one candle is 4 15-minute candles. You might not see much of a difference in whether you should be going up or down for this particular system. So you can. I'm not saying you shouldn't. But I don't think it'll really help you. It might help you more before you enter the trade to see in what general direction, such as here on the high time frame, you can see it's clearly heading down. You can just visually see it. And if you're thinking about getting into a sell trade at that point, and you saw a big candle, where was I now? Let's say you saw this big candle that just developed going down, then you might want to stay out of the trade at that point. But once you're in the trade, you basically, if the signals are there, you're in the trade, then I would say you wait it out, unless there's some major news announcement or something really happening, or it's near the end of the trading day. I think you'd trust your system just to play out for you. Yep.
All right, thanks. So let's see. We have Benji, who posted that I believe that was 40 pips profit on
Well
GBP
done, Benji.
USD today. Benji also commented, he wrote this, What I was doing today, which was very profitable, start analysis on 4 hour time frame,
Mm-hmm.
then 30-minute time frame, and then
Mm-hmm.
place the trade on the 5 minute time frame if the
Mm-hmm.
4 hour and the 30 minutes, so the higher ones, match direction. So he did a bit of a,
All right.
like a higher
Yes.
time frame analysis.
Yes, similar to what we've done just now. Well done, Benji. Now, I would say, though, that the 5 minutes, as you would know, then most likely you sound like you've been trading for a while, that it's very fast. So, for the most people that are on here, I wouldn't suggest starting out on the 5 minute, especially not on a live account. You could definitely experiment on a demonstration account. You just get to see how quickly it moves. But you really got to set your targets quickly, stop losses. You've got to really be in it. The 15-minute gives you a bit more time. But 100%, Benji, if it works for you that way, that's excellent. I'm really glad. Thank you for letting us know about that.
Great. We also have Rene. He mentioned that he got 70 pips in two
Wow.
trades today. Rene, if you're
Mhm.
still here with us, maybe if you could just type in the chat, maybe just a bit more details, like which pairs you took, what time frame was it? Were they buys or
Mhm.
sells? Just a small extra info. But yeah, 70
Excellent.
pips, two trades from Rene, and
Well done, Renee.
also, we have just a second to find it here, real quick. Jan, he just mentioned that he had 140 pips for profit on the 4 hours. So Jan, great.
Excellent.
Yeah.
Well done, John. Yeah, I'm really encouraged to see that. I'm glad you're sharing it with us, not just for myself, but obviously for yourself, and just so that the other traders also, uh, we're a group here. I'd like to think of us as a kind of a family, all trying to learn together. And it's encouraging to other traders also. Now, of course, some that are on here, I don't want you to get despondent if you haven't succeeded and have tried to trade with the system just yet. As I said, try it out for a while and at least try, on a demo account at least, because unless you're trying, we could talk all day. It's not going to help with your trading at all. You really have to be on the chart, just checking it out in your own time, getting familiar with the patterns, as I mentioned, just practicing a little bit with various ways. So if you are losing, that's not necessarily a bad thing on a demo account because at least you're gaining some kind of experience. And it's encouraging, I think, to also hear that others are doing okay with it. So we're not in a contest here as opposed to saying, who's going to win today and who's going to lose, not at all. But or who's going to make the most pips today? It would be nice, but to be fair to everyone, we're all at different levels. I know that. And I don't want anyone to feel that they're left behind or despondent or whatever. But to those who are doing well, congratulations. It shows that you put in a bit of effort. At least you've tried the system. And in fact, that gets me to my next point. So I'm just going to pause there for a second, sorry, because I need to now bring back my presentation and go back to where we had left off. So we're busy now with what I call the Q&A, right? So I'm going through the questions and answers, as I said, towards the end of the webinar. And this is related to what we were just going through now, Amir, and to everyone that's posted. I'd like you to take a next action step for tomorrow. So we want to try and encourage some kind of growth for everyone here. I don't want to call it homework. I'd like to call it an action step because that demonstrates that we are progressing. If you haven't yet done so, I'd like you to download and trade with the system, the Profit Wave, during the next 24 hours before our next session. And if you have, that's fine. I'm actually pleased that you've done that already. But when you have made a trade, such as Jan and others that have mentioned it right now, any trade, please could you take a snapshot of it on your laptop and email it to me at support@acceleratingprofits.com. All right, support@acceleratingprofits.com. And what I will do is, if you don't want me to mention names, I won't mention, but I'd like to bring these up on the screen so we can have a look at these during the course of the next few days as well. So we can see, Here's somebody who entered a trade. Where did they go wrong? Here's somebody who entered a trade. Why was it perfect? So that we can interact a little bit with them. And you could have this as the subject line for the email, 5-day challenge trade. I've told my support team to be on the lookout for anybody that's on this webinar or might see a recording of this to please email a snapshot. You don't have to, but I'd like you to, if you can. And in the next few days, from those that do, and I'm hoping as many as possible do, I will select a few of you to have, as I mentioned at the beginning of the webinar, one of my systems that actually is retailing at $250 at the moment from inside my secret trading vault, which I call it the secret trading vault because no one else has access to it really, except for very few traders. I will give a few of you that do that a $250 system over the next few days, right? So not only are we learning by doing this, but I'd encourage you to do it by saying, look, you can get, you have the potential to get a free system with $250. Now, also, I'd like you to remind you, besides emailing that to me, that on acceleratingprofits.com, where you originally registered for this webinar, and where the recording of this will go up, but it's always great to have people on your live because I get to get the questions answered, and you get to interact with me a little bit. There, if you scroll down to the bottom of the page, you'll see that you can leave a comment there. I've already had about 100 comments. A lot of people just saying hello and so on, which is fantastic. But if you've got a comment about the particular system that you could tell me what you like about the system, or even post your trade results there. You might not be able to upload an image, which is why I want you to email it to me, please. But if you could just post it there as well, it shows me that you're taking some kind of an action, right? And it shows others also that others are involved. It's encouraging when you know that you're in a group. I think you tend to progress more than if you were sitting isolated alone trying to do this by yourself. So trying to do this as a group exercise, but as an individual exercise also. So if you could leave a comment for me there, please. And I'll answer as many as possible. While I'm awake, I'm answering them. And at the end of this challenge, a few more of you that do leave comments also would then be awarded another free gift in a few days' time near the end of our challenge worth $750, right? So I'd like you to attend each of these, which I know, thank you for those who have been, but anyone who's missed it, you still have a chance to catch up and, of course, progress through the last stages of it. But acceleratingprofits.com is where you can get to make the comment. Support at acceleratingprofits.com is where you can get to email this through. Emir, could you type this into the chat? Both of those, please. Just
I have
that wants.
already.
Oh, have you? Excellent.
Yes.
So, guys, you could see this if you're on the Zoom chat. Otherwise, if you could just scribble it down somewhere, that would be great. And then at least you've got these details. Okay, so there's a lot of systems I'm going to be giving away other than this. Now, on top of this, tomorrow, and it's another important reason why I'd like you to be here tomorrow, I'm going to share with you, we've done the profit wave to a certain extent now, but I've got another system, a completely different system that I'm going to be giving away free tomorrow also. A very valuable system, free for you. We'll cover some more training similar to how we did today, and we'll cover that system as we move along with our 5-day trading challenge. So within the space of 2.5, 3 days, you'll have another system, which is tomorrow, right? And you'll be able to register for that one. It might not be up on the page just now because I know we're just busy with this presentation at the moment. This recording will go up pretty soon, hopefully within a few hours, at worst case by tomorrow, but hopefully within a few hours. You'll then also, just tomorrow when you get online, if you could go back to this page, refresh it, in case you don't see it, then you refresh it, acceleratingprofits.com, and you will see another link where it'll tell you to join me for that day's webinar. So most of you have done that for today, so you know what I'm talking about. So please do join me tomorrow for that webinar. And at that point, I just want to stop sharing for the moment. And I just want to thank all of you who are on here. I know some of you have got cameras, some of you don't. I'm just grateful that anyone's on here, to be honest, because it shows me that each of you that are on here, and I'm scrolling through, to see all of you here, because there's a lot of people I recognize, a lot of people I don't recognize. So I'm very pleased to see so many of you on here, and it's definitely more than yesterday. So as we're building up momentum, I'm seeing more and more people on here. It's making me really encouraged that so many people are wanting to change their lives and to try and get proper guidance, which I'm hoping I'm giving you, right? It's no good me speaking here if I'm not giving you something of value to, at least at the end of the day, take home with you. And hopefully maybe a light bulb goes off in your head. Something I've said today might have encouraged you in some way. And that's what I want to do, is try and encourage you. And we're all here together, right, guys? So thank you. I'm just going to randomly select, thank you, AJ, Harvey, Victor, Rakesh. Goodness, I hope I don't miss any of your names. Ken, Sakele, Clifton. I'm just randomly going through, and you'd probably be able to see everybody as well. Tim, Mel, Joe. Gosh, so grateful to have you all on here. And I hope that you've learned something today, and I will definitely tomorrow be furthering this presentation with much more. So please join me tomorrow. Thank you for attending. I know it's getting late for some people who've set their alarm clocks and so on. We're over an hour already. And I look forward to tomorrow, and I look forward to showing you that new system tomorrow as well. And I'm looking forward to seeing your trades being emailed through to me and answering your comments. Thank you. I'm sure you're tired of my voice now, so I'll hand it over to you, Emir. Thank you.
Thanks. Not much to add after such a nice presentation. I'm seeing from the comments here that the guys are really satisfied. Hi, Matthew. I saw your reaction. Hi. When Adrian said he's going to give another system tomorrow. So, yeah, Matthew and all the rest of you guys, feel free to join us. As Adrian mentioned, same time, same place, tomorrow, 2 p.m. Eastern Standard Time.
Yes.
You can get the new link on acceleratingprofits.com. In case you've missed this or the previous webinar, you will also get the recordings there, as well as all the downloads that Adrian is sharing with you. So
yes.
not to keep you much longer here. Yes, Adrian?
Yeah. I was just going to make a comment that I realized by watching the recording myself of yesterday that my audio was not 100%. So sorry about that, guys. So hence I've got this helmet thing on today. I tried out a few microphones, but this one seemed to work the best. So I'm now going to get on my SpaceX rocket and take off. But hopefully today you guys would have heard me a little bit better than yesterday. So thank you for that. Thanks, Amir. Thanks, everybody.
Thanks, everybody. We'll close now and hope to see you guys tomorrow. Cheers and bye.